everyone, welcome to today's webinar all about filing US taxes in 2023. Let's jump in. So obviously, as I go through this, you're probably going to have a lot of questions. We will have a live Q&A at the end. And of course, if we don't get to your question at the end, remember that there is a great resource for you, our Facebook group. It's completely free to join. There's a lot of people in it, super active with lots of questions, and that is a great way to ask any questions that you might not have addressed in this webinar. So keep that in mind. Basically, bookmark the page now. So, who am I? Why am I talking to you? If you don't know me already, maybe you do, maybe you don't, I'm Nathalie Goldstein. I am American, living in Vienna, Austria. Obviously, don't sound very Austrian, I know. So I'm originally from California. I moved abroad, and just like you, I discovered I had to file US taxes, even though I don't even live in the US anymore. Pretty ridiculous, pretty troublesome, but we got through it. So essentially, when I went through that process back then, I tried so many different tax firms. They were really expensive, didn't know the difference between Austria and Australia. You know, it's a common mistake in America. And I just didn't like the process. And that's why we came to create MyExpatTaxes. So MyExpatTaxes is the leading US tax software for US Americans living abroad that have to file their US taxes. And we are the most trusted tax software out there now for US expats. And I myself am an enrolled agent, so I am here for all your US expat tax questions. Let's dive into what we'll talk about today. So today, obviously, we'll talk about what is the major changes in 2023. Please don't get it confused. We're obviously filing a 2022 tax return in the calendar year 2023. We always file the previous year in the current year, so keep that in mind. What we'll talk about for today is a lot of different tax savings and refund increases. So obviously, we've seen a lot that's happened in the past few years. The IRS has adjusted things to help save you more money, help get you more money. Yes, even for us expats. We'll also talk about removal of some pandemic one-time refunds we had. So unfortunately, I think, we are past the pandemic, so the IRS is not giving out free money anymore. So we'll have to address that as well. And of course, besides those main changes for the year, we'll also talk about, Expat Tax 101, what to do if you haven't been filing. So just a side note here, if you're freaking out because you haven't filed your taxes, you think you're going to jail, you're probably not. Just stay calm, listen to the webinar, and we'll address how you can fix your non-filing issues with a proper way that the IRS will make sure you're all caught up with no penalties. And of course, other things that are related is the FBAR and FATCA. So, what's changed? Well, there's a lot of increases that have happened for this new tax year. So obviously, the major one is always the standard deduction. The standard deduction increases pretty much every single year. And in summary, it's increased about $400 for every taxpayer. We'll go through the actual standard deduction amounts in the next few slides, but essentially, just so you know, the standard deduction is how much you can deduct from what you earn, and you don't pay taxes on it. So it's always good if the standard deduction is higher. Also, tax brackets have also increased. So tax rates have stayed the same, right? That hasn't changed, but there's more money in the tax bracket. That sounds a little confusing. Essentially, you can earn more money, and more money is taxed at a lower rate than at a higher rate. So basically, more good news for you. Another great thing for you expats is that the annual foreign earned income exclusion has increased from $108,900 to $112,000. And that's great news because even if you don't pay any foreign taxes abroad, if you're a digital nomad, as long as you work abroad and you are eligible for the foreign earned income exclusion, which we'll talk about, you can exclude a lot of money and essentially have that tax-free. And of course, last but not least, probably the most exciting is for those US expat families out there, the refundable additional child tax credit has actually increased. So it's gone from $1,400 to $1,500 for everyone. So that is pretty major news. So if you were expecting a refund on this year's return, you can expect even a little bit more. Not great news. Well, it depends on how you see it, right? Is technically the pandemic's over. that should be great news, even though we all, depends on your opinion of what a pandemic being over is. For the IRS, there are no more pandemic handouts. So as you saw in calendar year 2020 and 2021, the IRS was basically throwing money at US taxpayers. And so you had, anywhere from $1,200 to $1,400 checks being mailed to you as a US citizen, no matter where you lived during the pandemic. Unfortunately, for calendar year 2022, that is no longer a thing. So there is no stimulus payment that you can claim on your 2022 return. Another thing that has changed, not sure if it's related to the pandemic, but it seems like it is. Back then, you could have deducted an additional $300 to $600, depending on your filing status, as an above-the-line deduction. What this basically means is you could take the standard deduction, and then on top of that, you can also take the $300 to $600 deduction for your charitable contributions. In 2022, no longer allowed. If you want to deduct charitable contributions, you have to itemize your deductions. So it's either or, either the standard deduction or you itemize deductions and then you can have charitable contributions deducted. Another thing is that those people living in the US, not so relevant for us expats, I don't think we care so much, but those that were living in the US for 6 months or longer during the tax year, right? So maybe those fresh expats, they saw really high refunds last year, right? So if you had lived in the US for more than 6 months, you would have gotten an additional child tax credit refund of anywhere between $3,000 to $3,600, not $1,400. Yeah, that's gone. Another thing you would have seen is that if you had childcare expenses, you would have had part of that refundable, also gone. Again, not really relevant for us expats that are living abroad for the majority of the year. However, just want to call out, if you got that last year, don't expect that again this year. So that was what's new, what's changed in a nutshell. I'm sure you'll probably have questions on that. Again, please save it till the end. Let's talk about who even needs to file a US tax return. So I have a little screenshot here on the slide. It probably looks like, the background of your US passport, and that's because it is. So if you told me, no one ever told me that I had to file my US taxes from abroad, technically you've been carrying around the instruction manual your whole life. Your US passport in the very back has a section right there that says, no matter where you go with this passport, you gotta file your US taxes. So keep that in mind, not trying to scare you, but also telling you that you are not completely flying blind. Not that anyone reads the back of their passport, but if you're interested, go ahead and flip to the back now and see for yourself. I'm not making it up. Besides that, there's actually filing thresholds. So just because you're an American living abroad doesn't mean that you have to file US taxes immediately. What it actually means is based on your income. And also not if you're just American. So if you're a US citizen or you have a US green card, keeping in mind your US green card, even if you've given it up, if you haven't given it formally, it still counts. You need to pass the filing requirements, and if you do, you have to file a US tax return. So what does it mean to pass the filing requirements? Well, first you have to think about your worldwide income. And that's exactly as it means, worldwide income, not just US income, but all sources of income that you have. So whether you earn a salary from Austria, pension income from the UK, rental income from Singapore, investment income from, Germany, and then maybe some other retirement benefits from the US, you have to combine them all together. And keep in mind, you're combining the gross amounts. So basically all income before any deductions or taxes paid. And if that worldwide gross amount is larger than the filing thresholds you see on the screen, you need to file a US tax return. So again, if you're a US citizen, if you're a US green card holder, if your worldwide gross income is over the filing threshold you see on the screen, you need to file a US tax return. You're legally obligated to do so. So let's talk a little bit about these filing thresholds. Most of the time, they are the exact same as the standard deduction. So like I said, the standard deduction increases every single year. What you see on the screen is basically your standard deduction. There's only one exception to that, and that's for married filing separately. You see that the filing threshold for that filing status is $5. It's very low. So let's talk about that. What does it mean to be married filing separately? That is actually probably the most common tax filing status for US expats that are married abroad. So say you're married to a non-US citizen and they don't want to be on your US tax return. Surprise, you really only have two options as a filing status. You can't file a single because you're married. So you'll have to be either married filing separately, aka you do not include your non-US citizen spouse on your tax return, or if you do have a US child or dependent that can qualify you, you might be able to file as head of household. But most commonly, married US expats that are not married to other US citizens will be filing as married filing separately. And the filing threshold is $5. It's just the way it is. It hasn't changed since 2018. And basically, if you make enough money to buy Starbucks abroad, well, probably not even enough to buy a cup of Starbucks, but close to it, you'll have to file a US tax return. The standard deduction is the same as single, so it is actually still $12,950, so don't freak out. It's just the filing threshold is a lot lower for married filing separately. Now, another thing to note is if you are self-employed, this is not shown on, it is shown on the screen, but if you're self-employed, that last one there is you have to file a tax return if you have over $400 in net profit. So regardless of all the other filing thresholds, no matter what your filing status is, if you're self-employed, if you freelance anywhere, right? You write a blog, you sell some things on the side. If you have any type of self-employment income and the net profit is over $400, you have to legally file a US tax return in the event that you owe self-employment tax. A lot of people don't, but it is possible, especially for digital nomads or those living in countries that don't have certain treaties with the US, that they're liable for self-employment tax. So nothing to take lightly. Continuing on, even if you don't pass the filing thresholds, you might still want to file a tax return. So actually, this goes really much for 2020 and 2021 tax returns, is basically, even if you don't make enough money to legally have to file a tax return, you might want to get a refund. So like I said, there were stimulus payments that were paid out in those years. So a lot of people that didn't make any income, even students, they filed tax returns in order to get the refunds. You can't get a refund without filing a tax return. So that might be something to consider. In terms of the additional child tax credit, you might not make enough to legally have to file, but you could still get a refund. So again, even if you see this and you say, oh, I'm off the hook, I don't have to file, you might want to consider it if you're eligible for a refund. Now, obviously, age can be a factor. It's not a huge factor in determining if you need to file. Just keep in mind, if you're 65 or older, your filing thresholds slightly increase, except married filing separately. That doesn't change. But they slightly increase, and if you are, a child or you have a child and you're worried if they have to file, there's actually no age threshold to meet to have to file. It's not that when your child turns 18, they're an adult and they have to file taxes. That's not the case. It's always dependent on how much money they make. However, if you do have children and they have a lot of unearned income, so like investment income, you open up brokerages for them, different investment funds for them, you'll have to watch out a little bit more carefully in the event that they might have to file a tax return or at least declare their investment income on your tax return. A lot of information, I know. Basically, if you make money abroad, you probably have to file US taxes. So going to the next slide is what happens if you've never filed? Well, you're probably sitting there freaking out, like I said. There's no reason to. There's so many people that didn't know they had to file. I know I made the joke about the US passport, but come on, who really reads the back of it, right? So there's a lot of expats out there that have been finding out in the last few years that they had to file taxes. And the IRS has acknowledged this. So they created actually an amnesty program called the Streamlined Foreign Offshore Procedure. So if you haven't been filing taxes, they actually give you the option to get caught up. So say you haven't filed for 10 years, 30 years. You're thinking, oh my gosh, how am I going to catch up on all of those years of back taxes? You don't have to. You only have to file 3 back years of federal taxes and 6 back years of FBARs. FBARs are foreign bank and other accounts basically that need to be disclosed. We'll talk about it more towards the end, but essentially it's really a limited scope. So don't worry about the 30 years that you've been ignoring taxes, just focus on the last 3 years. So for this calendar year, what that means is you would be filing back to 2019. So you'd file your 2019 and to 2021 tax return as streamlined tax returns, and you'd be filing your FBARs from 2016 to 2021. Those would be considered the streamlined FBARs. And the good news is because of all the things that have happened, right, with the pandemic and the stimulus payments, and especially if you have US children that qualify for the refunds, you'll probably be getting a lot of money. So while you sit there thinking, oh gosh, the IRS is gonna, take all my money and put me in jail for not filing taxes, a lot of people go through the streamlined filing compliance procedure with us, and they end up getting, I kid you not, depending on how many kids they have, upwards of like $10,000 in refunds. And not only that, they get interest on top paid to them from the IRS, even though it was their fault for not filing. So it's not that scary. Most expats don't owe taxes. At this point in time, almost all expats will get some type of refund because of the stimulus payments. So if there's any time to file back taxes, it would definitely be now. Who doesn't want a nice little refund, right? Just them things to keep in mind. When you file streamlined, you cannot e-file those returns. You will have to paper mail them. So it will be quite a long time before they're processed. We used to see paper mailed returns processed within 6 months. Then the pandemic happened, and then, all the staff got cut, et cetera, et cetera. So probably processing times are more like a year and a half. Better to start earlier so you don't have to, start earlier so you can get your refund earlier. Meaning still probably a year and a half from now. Otherwise, I always say do try to e-file your current tax year return. So that would be 2022, so that you can get into the system faster. So you're still eligible to e-file your current year, you just cannot e-file streamlined years. I do want to warn you that based on whatever tax firm you go with or tax software you use, you have to be very mindful that as an expat, there's always these silly restrictions. So most US-based tax software will not even let you e-file a return or do streamlining because you don't have a US phone number, a US address. Some of them don't even let you pay at the end because you don't have a US credit card. A lot of tax firms, even if they're for expats, use US-based tax software, so the same restrictions can apply. So if, say, for example, you're married to a non-US citizen, you're married filing separately, they don't have a social security number or an ITIN, they don't let you e-file, they make you paper mail. So be mindful of that it can happen, and ask questions before you pay. Obviously, if you use MyExpatTaxes, this is made specifically for expats, and we work directly with the IRS. So pretty much 99.9% of all of our expats can e-file, pay without any issues. Obviously, just not for streamlining years. So want to disclose that up front. And we do offer the streamlining package directly in the tax software. So while you go and Google it, you'll probably see a lot of tax firms offering it for around $2,000 plus for the entire package. You can actually do the entire streamlining compliance procedure on your computer within a day on MyExpatTaxes. If you have all your information available, we've seen people finish it up within an hour or two. So you can get compliant a lot faster than you expect. Now that you've heard about the streamlining filing compliance procedure, that's about getting caught up. What about just staying on track? So if you're a regular filer, when is your tax return due this year? So everyone knows that taxes is due April 15th. Honestly, I think if you ask a non-American, they'll probably tell you what the tax filing deadline too, because it's pretty much when April comes around, it's in every single show on TV that the tax deadline is around the corner. This year, it is April 18th. So basically, it's always April 15th unless April 15th falls on a weekend or a holiday. And this year, like last year, the 15th does fall on, one of these occasions. So this year's tax filing deadline is April 18th for those living in the US. For those not living in the US, aka us expats, we always get a 2-month automatic extension. So that's June 15th. Now keep in mind, If you owe taxes, it does not matter that your filing deadline is June 15th. You still have to pay by April 18th if you want to avoid interest or penalties. So if you owed taxes last year, if you think you might owe taxes this year, if you have a lot of US sourced income that you don't pay foreign taxes on, try to file before April 18th, because you will have to pay by April 18th, otherwise you will owe interest and penalties. They're not super high in the beginning, so nothing to get very nervous about, but we do suggest, you want to keep more money, right? So if you think you owe taxes, stick to the April deadline. If you know that you don't owe taxes, if you know that you'll probably get a refund based on your history of filing, June 15th, that's your deadline. By June 15th, if you don't have time to file, enough information to file, make sure you get an extension to October. So that's the next deadline. You do have to actively do something for this extension. June is an automatic extension. You don't have to do anything. With that being said, again, be mindful of what tax software or how you file, because technically you do have to add an additional statement in your tax return, which we do automatically for you as an expat with MyExpatTaxes. But essentially not all tax softwares will do that for you. So the IRS won't know that you are qualified for this automatic extension. Now, the other deadline is October, and you'd have to get a filing extension for that. So you actually have to request it from the IRS. It's a lot easier than it sounds, especially with MyExpatTaxes. We actually pretty much force all of our taxpayers to get the extension starting in end of May, beginning of June, just to be safe. There's no effect on your tax return. It's completely free to do. You don't even have to pay in MyExpatTaxes to get the filing extension, right? But you have to file this form electronically or paper mail it, but we don't recommend paper mailing because, again, 1.5 years processing time probably. Or you can even just pay $1 via irs.gov/payments by June 15th, and this will get you the extension till October 16th. Technically October 15th, but again, the whole weekend holiday situation. And there are further extensions. I won't talk about it too much, but essentially you could then extend to December and etc. However, let's just try to get your taxes filed by October. Obviously, if you have back taxes, do it as soon as possible. As I said, if you're streamlining, you can e-file those, so you want to get that in a little bit earlier. And if you just have years that you don't need to streamline with, but you need to, get caught up, in the event you do owe taxes, the earlier you file and pay, the less interest and penalties there are. So that was who needs to file, when you have to file. Let's get a little bit into what you're filing. Basically, you're going to do your US taxes. You're going to see something that's 50 pages to 100 pages long, and you're going to wonder, what is going on? How do I have this much information to give to the IRS? These are the major forms to focus on. Everything else is probably just additional statements, calculations, things for your reference, etc., etc. Focus on these forms. So the main thing to note is just 1040, that's your overview form, right? That tells you how much income you have, what deductions you're taking, what credits, what refunds you have, how much you owe. That is the overview. You'll see some things like Schedule 1, 2, 3 attached to Form 1040. All the same, just additional statements. Focus on the Form 1040 itself. If you are claiming the additional child tax credit, right, because you have children that qualify, you should be looking for Schedule 8812 in your return. If you're excluding your income with the foreign earned income exclusion, you'll see Form 2555. If you are using foreign tax credits to offset US taxes owed, you'll be seeing 1116. If you're claiming a tax treaty benefit, you'll see Form 8833. And of course, these are additional forms that you have to kind of do with your tax return. The FBAR, which is actually not sent to the IRS, but sent to the US Treasury. Keep that in mind, that's very important. And if you actually pass the threshold, you will include basically an extended version of the FBAR via Form 8938 in your tax return that is sent to the IRS. Lots of information, I know. This is just for you to reference, take a screenshot of, to know when you review your tax return, these are the main forms to focus on. Now let's actually talk about what these benefits are. So everyone says expats rarely owe taxes. Why? It's because of these three benefits. The first one is the easiest one, I would say, that most expats tend to use. So that's the foreign earned income exclusion. That's the one via Form 2555. So you can exclude over 100K of foreign earned income. Foreign earned income meaning it must be foreign. So you have to physically be abroad when you earn that money. You cannot be in the US when you earn that money. It must be earned income. So it has to be salary, self-employment, some type of income that you actively work for. It can't be investment or retirement or social security benefits or, passive rental income. And that can be excluded via Form 2555. It's relatively easy to use this form. However, things to note is if you use this form, you cannot get the additional child tax credit. So that's probably the main reason we amend tax returns at MyExpatTaxes, is that someone will file their tax return either with, a different firm or a tax software, and they'll go for the easiest approach using 2555. But what then happens is they end up losing out in thousands of dollars in refunds. So something to consider. Also, if you want to still contribute to your individual retirement account, 2555 can make it pretty hard to do so if you exclude all of your income via this form. Now, the foreign tax credit is another tax benefit that I personally prefer. That's on Form 1116. It basically says every single pound, euro, whatever of foreign taxes that you pay abroad, you can claim on your US tax return to offset US taxes. So you should never be double taxed, because if you pay foreign taxes, you can claim the credit on your US tax return. It is hard to use because it's a lot of math. If you look at the forms itself, it's a lot of math. There's a lot of different types of allocations for the foreign tax credit between general, passive, etc. I won't bore you with the details. So while the math on the form can be very complex, there are benefits. So the main benefits is that you can claim the additional child tax credit. And the other main benefit is that if you want to contribute to your individual retirement accounts, you will actually have taxable compensation to help make you eligible. Obviously, there's other things to consider when you contribute to your IRA. However, 1116 is normally the way to go if you want to contribute. Now, the third benefit is what to do on income that is not earned income, right? So social security benefits, so to say, and you don't pay foreign taxes on it. Because again, some types of government payments, they're not taxed abroad. Well, it doesn't mean that the US will just tax them. It means you should look at the tax treaty between the US and the country you live in to see if there's actually an exemption. So a lot of tax treaties will say, social security benefits are taxable only in the US, or they're taxable only in the UK, or it depends on who's the payer of the social security benefits, or depends on where you live. But it will actually give you quite clear rules about who taxes what income, and a lot of the times foreign social security benefits will not be taxable by the US. Now, the con of using this form is it's very complex to obviously understand a US tax treaty. You may read it and say, this is easy, right? I got this. Some things you have to keep in mind. Every single US tax treaty has something called a savings clause. A savings clause basically says that if you are a US citizen, consider that pretty much 99% of this tax treaty is not applicable to you. So there's only actually a couple benefits within this giant tax treaty that you can use as a US citizen. So that is why it's pretty difficult, because one, you have to understand what it's saying, and then two, you have to figure out if you can even use the benefit based on the savings clause. So that's the downside of using the tax treaty, but obviously if you get past that, it's a great benefit to use, because you can just literally write, this income is not taxable in the US. That's it. Obviously, you're probably thinking, how am I supposed to know what tax benefit to use, when to use them? Can I only use one at a time? You can actually use all three at the same time. That's what MyExpatTaxes is here for. You just enter in your income in your local currency. We calculate everything. We figure out what's the optimal approach, right, based on your taxes owed or your refund. And we tell you what we use. And we tell you we either use the foreign earned income exclusion or the foreign tax credit, why we do that. And then if you're applicable for a tax treaty benefit, we'll just throw it in there for you, right? You don't have to read any tax treaty. We just automatically put it in there. So keep that in mind. That is a benefit of using a tax software that's actually made for expats. Okay, that was the benefits. I will jump into two more topics that are really for Expats that people don't always know about. So child tax credits is the first one. I've talked about this plenty because so many expat families miss it. If you have children that are under the age of 17 with a US Social Security number, you probably can get a refund, especially if you live in a country with high income taxes, like any country in the EU, basically. You should be trying to get a refund on your US tax return, right? Your local country probably gives you some type of family bonus as well. And the US also does that, and you're eligible for it, even if you don't live there. So just obviously you can read the screen. Quick notes, there are changes between the years. You can expect about $1,400 for each child that's under the age requirement. In 2018 to 2020, that was 17. In 2021, things changed a little bit. It was $1,400 to $3,600, depending on where you lived for the majority of the year, and the age limit was increased to 18. 2020, we come back to an age limit of 17, but $1,500 for anyone, no matter where you live for the majority of the year, per child. So obviously there's a couple things to note. You do have to have some earned income, so $2,500. You cannot claim the foreign earned income exclusion. So if you're thinking, hey, I have children that's under the age limit, they have Social Security numbers, I've never seen this refund, what are you talking about? Look for Form 2555. If that's in your tax return, that is what's preventing you from getting this refund. And obviously, if you have children, you just got, new additions to your family, congratulations, or you haven't gotten around to getting a Social Security number for your child yet, get it ASAP. Make sure you file an extension because it does take a while to get a US Social Security number, plan 3 to 6 months. If you're thinking, I don't want to get my child a US Social Security number because I don't want them to have to file taxes, spoiler alert, if you gave them US citizenship, they have to file US taxes. It's not about a Social Security number. What you do harm them with is if you gave them US citizenship and then you don't get them a Social Security number, you're going to make them go through the hassle as an adult to try to get a Social Security number themselves, and it's a lot harder as an adult than it is as a child. So basically, how do you get the refunds? If you haven't been filing, go under the Streamlined procedure. If you've been filing, but you had 2555, you can always amend your prior year tax returns to then revoke 2555 and claim the refund if you're eligible for it. And if you haven't gotten a Social Security number yet, like I said, for your children, get an extension this year. Give yourself time to October to get that Social Security number and then file your 2022 tax return. Alrighty, so another big topic is FATCA, FBAR. Basically, you go to a bank in your local country. They ask you for your US Social Security number. You have no clue why. Or you get a call saying that you're a US citizen and they want to close your bank account. It's because of FATCA. It's basically this US federal law that wants to make sure you're not money laundering. Long story short, there's a double reporting requirement. Any financial institution that has US citizen account holders must report that information to the US. You as a US taxpayer also have to report that same information via the FBAR or Form 8938. They're basically the same. They are for all your foreign financial accounts, so not just bank accounts, but pension accounts, investment accounts, any type of financial account that you have, financial asset, etc. If you have over $10,000 combined of maximum balances, I will talk about what maximum balances means, you have to file an FBAR. If you have over 200K of combined maximum balances in these financial accounts, right? This depends on your filing status. It can be doubled if you're married filing jointly. It can be lowered if you're living in the US, etc. But say about $200,000 of combined maximum balances, you have to file 8938. We include this for you directly in MyExpatTaxes, so it's not some extra step you have to take using some extra software. Keep in mind, these forms do have penalties. If you don't file them, there's about a $10,000 penalty on each form, so make sure you file them. What does it mean to calculate your maximum balance? That is not the easiest because it's not like you can go to your local bank on the online portal and say, hey, give me my maximum balance in 2022. It's a little bit more difficult, but basically I would say look at your monthly statements, right? If you don't have monthly statements, or if you want to be a little bit more accurate, you can always pool all your transactions and try to get a running balance. But it's really the maximum amount you ever had in that account from January 1st to December 31st in that year. Even if you had money in one account and then you transferred the same exact money to a second account, that can trigger a maximum balance in both accounts. So yeah, you're double counting, but that's the way the rules are written. So again, ignore all US accounts. This is only for foreign financial accounts. What you would do is look for the maximum balance in each account, right? Depending on whatever date, as long as there was a maximum balance between January 1st to December 31st, take that maximum balance. You add it all up. You have to convert it to USD, of course, using the Treasury exchange rate. And if that amount in USD is over 10,000 US dollars, you have to file an FBAR and report every single foreign financial account you have, not just the ones that exceed $10,000. Every single one, even if there's $0 in it. This also includes online banking accounts. So very important, like I said, FBARs do hold a penalty. If you've been filing your US tax return, but you haven't been filing your FBAR, don't worry about it too much, because there is a delinquent FBAR submission process that we also support with MyExpatTaxes. It's similar to streamlining, but without the tax return bit. Basically, if you haven't been doing something, there's ways to get caught up without penalties. I gave you so much information. I hope that this was educational for you. I hope it was helpful. I hope it wasn't scary. That's usually my main goal, is to make it more helpful than scary. Obviously, if you're, someone savvy with Excel and number crunching, kudos to you. Good luck with your tax return this year. Keep in mind of the changes I told you about. If you're looking to use a tax software or tax firm, look no further than MyExpatTaxes. We really try to make it as easy as possible for you as a US expat, because I use the software myself. I also want it to be easy for myself as a US taxpayer. We try to make it as affordable for you as possible. So check us out, right? You can go through the software. You don't have to pay upfront, and see how you like it. I mean, I promise you, if you've been doing it on your own, or if you've been waiting for a tax firm for 6 to 12 months to just create a tax return for you, or if you've been pulling out your hair trying to enter your foreign situation into a US tax software, this will probably be a breath of fresh air. So try it out, like I said. Otherwise, again, we will have live Q&A right after this. If your questions are not answered, join the Facebook group. In our Facebook group, you won't necessarily see me posting, but what will happen is if there's questions that are unanswered, or anything that needs my attention, our team will actually send those questions directly to me, and I'll send them the answers. So even if you don't necessarily see my name, I am probably answering a majority of your questions through my team. So thank you for watching this. Thank you for spending your time with me now, and happy tax filing.